9 out of 10 startups fail. 7.5 out of 10 venture-backed startups fail. So the odds are against you.
There are 13,000 investors and 40,000 business partners, which I need to understand how you can even manage all of that.
Raising capital is getting punched in the mouth often and keep moving forward.
Welcome to the next episode of the Entrepreneurial Excellence Podcast. I have an amazing entrepreneur, Scott Kelly, with me today. He's helped founders raise hundreds of millions of dollars, mentored hundreds of startups, and built one of the most active investor funder networks in the country. Scott Kelly is the founder and CEO of Black Dog Ventures, a business accelerator that bridges early stage innovators with capital strategy and sales execution. Through the ecosystem you have, there are 13,000 investors and 40,000 business partners, which I need to understand how you can even manage all of that. And Scott has really built a model that goes far beyond pitch decks, combining funding access with marketing muscle, business development, and hands-on executive coaching. You're also the creator of VC Fast Pitch, a national event series connecting founders directly with top investors, and also a college professor who teaches the next generation how to think like operators and not dreamers, which I think is a really important point we need to make sure also to dig into. Scott, welcome to Entrepreneurial Excellence.
Thanks for having me, Adam. I appreciate it.
Yeah. So Scott, I ask a question to everybody when we start. How do you define entrepreneurial excellence? What does that actually mean to you?
You know, that's a good question because I think there's a lot of things that go into entrepreneurial excellence and even being an entrepreneur to begin with. You know, first, it takes grit and courage because the reality is you don't know where or how you're going to get paid. And if you're going to succeed, 9 out of 10 startups fail. 7.5 out of 10 venture-backed startups fail. So the odds are against you. So yeah, you have to have grit. You've got to have confidence and humility simultaneously. And you just got to have that work ethic that, few have and most admire.
So agree. What is the outcome then? Like, how do you measure excellence? So maybe put sort of differently. I agree with all those points you just made, but how do you really measure what excellence actually is?
Excellence can be defined a lot of different ways. In the world of venture capital, a lot of entrepreneurs, they define excellence by how much capital they raise or a funding round. And, that could be one marker, which I don't particularly agree with. I think excellence is being able to have a clearly defined goal of what problem you're trying to solve and then executing that solution, in the most cost efficient and time efficient means possible. And I think that's really what it comes down to.
No, I love that. And then walk me through, what does it mean to actually execute on that vision and goal, right? Like, as you said, there's a lot of people who raise a lot of money, although theoretically that money is a function of their ability to execute. But maybe flip it on its head a little bit. What does it actually mean to achieve execution, like execution excellence? How does that happen? What are the skill sets that people look for? How did you train for that to give yourself a better chance at success?
It's a bit of an irony that being a college professor and, having two sons in college that, college doesn't necessarily teach you how to be a good entrepreneur. I think, the excellence comes down to is the ability to understand two things. One, understanding what you know really well and what you can do really well, but more importantly, knowing what you don't do well and what you can't do well. Because I find a lot of times, especially with early stage startups, you might be a good technical founder, but you may not know anything about sales, marketing, legal, accounting, operations, organization. You don't have those tool sets. And so organizational excellence and entrepreneurial excellence is based on building a team that can execute. And I think as an entrepreneur, you got to think beyond yourself. You've got to realize that, okay, I can do this really well. I need to build a team around me that can do all the other things really well to achieve that entrepreneurial excellence.
So, you're speaking my language, Scott. And this is something that longtime listeners know that I'm a founder of a company called Chore, and we do essentially the operations part for companies. But what I find is that a lot of founders are terrible at letting go. They don't want to let go. They don't want to delegate, or they don't know how to delegate, or they think that somehow being a great CEO is actually understanding the deep, deep details of every part of the business. Do you agree with that? Or if not, how do people get good at that work? Like, how do they look at delegating?
Yeah, I think delegation is in some cases a learned trait. The ability not to delegate does come out of fear. The fear that's not going to get done right or something's going to fail. And I think the best way, like anything, is to do it in small steps. I used to tell my kids all the time, how do you eat an elephant? One bite at a time. Delegate the easy tasks that you feel comfortable with and then move from there. I'm as guilty as anyone else. It took me, quite frankly, years to let go of my calendar. I still have trepidation about doing that, but I've let go of marketing. I've let go of accounting. I've let go of, other aspects that I'm not good at. And I think you need to understand that, especially from an investor standpoint, they don't want to invest in someone who's trying to do everything. They want to lead. They want to invest in a leader of a team that can get everything done.
So I totally agree. Let's go deeper, right? On delegating things and then you're delegating the easy things, then going further. How did you get to that point where you were truly comfortable with that? Like, what is the process you go about? Okay, I delegate one easy thing like my calendar, and then what, my EA does a great job, and then I give her or him my email, and then go further from there. Like, what are the steps to really get good at this? Because once again, so many people really have trouble even taking that first step.
I think it even starts even before then. I think the reality is, I'm a big believer in hiring slow and firing quickly. And what I mean by that is that you need to make sure that you can give people the not just the authority, not just the responsibility, but the authority to do things and the authority to fail. I think most cases that some of the best discoveries and the best path forward are through failing. And I think that's the key, is that bring in people that you can trust, give them not just responsibility, give them authority to make a decision, make a call, spend a budget. And I think those are the things that are really the key to turning a solopreneur into an entrepreneur and a leader, of a successful company.
So also I agree with that. I give people authority, but I also find it's really hard for leaders to give other people authority and trust them to do it. So how do you find a way to give that person authority and like push them in place? Like, what is the step? Do you just say, I trust you, and go out there and go?
The first step is to hire the right person. You have to make sure you have the right, you have complementary styles, complementary personalities, complementary aspects in how you do business and how you define success, in my opinion. You don't have to agree on everything, but you have to agree on enough things to be able to build that trust. And I think once you build that trust, then it's a case of just giving them a task and then watching them succeed and see how they handle success. And then also see if they fail and how they handle failure.
How many times do you let someone fail before you say this isn't a fit?
I typically, 2 or 3 times, I think, depending on the level of the task. Obviously, if someone is going to, my organization is going to be leading a team of people, and they fail constantly, they're going to become accountable very quickly. If they're handling just a task individually, and maybe they have a learning curve, I might be a little more flexible. I really think it's really based on the situation and the authority and responsibility that person has.
And how do you make sure you track they're doing the job that you gave them, right? The authority you vested in them. How do you track they're actually getting things done? Like, how do you set up a system to do that? Because I think entrepreneurs many times are bad at that too, right?
No, I agree. Depending on the level of the individual, we will discuss in advance all the pre expectations of what I deem as a successful task and successful accomplishment. And then I'm in constant communication. People on my team, they don't have to wonder where I am. They know I'm there. I keep an open line of communication. Sure, we'll have a staff meeting, we'll have meetings, weekly, but at the end of the day, if there's something that is an issue, I want them to call me right away. I want them to text me right away. I want them to email me right away, whatever is the best form of communication. So I think it really comes down to, as you build that trust, they're going to be trusting in coming to you with problems. Work on these solutions together. I think that's really the key. I'm currently, we have 24 companies we're actively working with at any one time. And I have weekly calls with them, each one of them, but I tell each one of them to call me or text me immediately. Don't let something sit. If there's an issue to be had or a problem to be solved, let's deal with that issue and solve that problem as quickly as possible.
So this is definitely, I agree with that completely. This is a pet peeve of mine where people on my teams, if there are issues, the worst thing is for me to find out about it after the fact,
right,
and figure out that it's actually happened. And then they sort of make an excuse for why it occurred. I want you to call it out right away, the moment it's happening. So as an example, right now that's on top of my mind, I have a teammate who is overseas, and there was a major weather event where she's based, and that happened last week. Everything seems okay now. And then I was like, I messaged her yesterday, like, hey, like, it seems like you're not really getting anything done. What's the status of things? And then this morning she messaged me and said, oh, there's still like fallout from the weather event. And I was like, well, I didn't hear from you all day yesterday, basically. And now it feels like an excuse. So what's happening here? And if that continues, it's just not going to be a long-term relationship, because you need to have a level of trust there. I want to talk more about all these companies that you're managing or helping with. But before we do, let's keep talking about hiring a little bit. So how do you identify great people? Like, you mentioned some of the key things you look for, but like, what's your process? How do you go about hiring, identifying these wonderful people?
I almost always get a referral from somebody that I trust.
Okay. That's hard. That doesn't scale though, right? Like, doesn't scale.
It doesn't scale, but for key roles, that I feel that's the most important way. And then I want to see what they do in action. There have been many cases where I will pay for them to do a specific task first.
Yep.
And then I see how they handle that specific task. And then that's part of the evaluation process, whether we bring them on a longer term basis.
How much do you usually pay? Like, what do the projects look like? How much do you usually pay? That's something we're thinking of implementing ourselves, actually.
Yeah, it really depends. Obviously on some menial task, obviously, be, the average, hourly rate. If it's a higher end, manager or senior level person, I'll pay them the pro rata of what they would make in a year. So that's typically it. Again, it really depends on the position and that we're trying to fill and the responsibilities necessary.
And how do you set up the right piece of work to do? Like, in other words, how do you make, like, the challenge that I would have sometimes is I want to set up something that I want to make sure it's real work, but also it's hard to give anyone some small little piece of granular work,
right,
giving it not in the company fully. And I want to make sure something's repeatable so I can do it on a regular basis and kind of learn across the board. If I give everyone a different test, I don't have a good baseline.
Right. Well, for me, like I said, we have dozens of companies that we're helping in various areas, whether it's helping them get in front of investors, helping them get on stage for an event, helping them scale their business, or, bring in, advisors or team members. So I can honestly, what I've done in the past is I've gone to one of my portfolio companies and I'll say, look, this is a potential new hire. You have a task that you need to get done. That's mission critical. Let me have that person do it with my oversight.
Okay. And then you mentioned using referrals. So how do you go about, do you tell your network? I mean, you have a lot of connections on LinkedIn and other places. Do you just say to everybody, hey, we're looking to hire for this role? I would love nominations. How do you get people
I tend not to do it on a public forum because honestly, then that just opens up Pandora's box of the DMs from hell. And so typically I've got a pretty good core network of fellow investors, fellow entrepreneurs that I trust. And I'll put it out to that small audience first. Occasionally on some, again, non-executive or managerial positions, I may post something on LinkedIn. I've tried to do, some of the LinkedIn hiring things, and it's good for me personally. It's good for some smaller tasks. But again, it's really through a small circle of people that we have a relationship. They know how I work. They know who I am, and they know who they should put me in front of. And I know the same about them.
Fair enough. And then once again, once you get someone on board, how long do they end up usually, do you start immediately giving them authority on different tasks and say, go get it done? I hired you for this role. I assume you can go do it.
Yep, I do.
Looks like.
Yeah, I say, look, I tell them, look, here's the list of things I need to get done. You need to get done on our behalf. I want you to start in the first one or two, get really good at that, and then I'll add more as we go. So they know ahead of time what the overall responsibility is going to be. But I get thinking really good at one task first. Much like, with my two kids, when I coach sports, my son, played football. I go, look, I want you to do a perfect 3-point stand first before you do anything else. I want you to know how to block with your head on the right side first before you do anything else, and add more things to that as he went. Very much the same method I use here.
And do you get like daily or weekly reports from each one of your new hires? Like, how do you track?
Yeah, I typically, what I'd like to do is I like to have a email communication once a day. It doesn't have to be detailed report saying, what did you do? What are the responses? What were the outcomes? Very short, no detailed report. And then typically what I typically like to do is probably once a week, maybe once every week and a half, send me something a little more comprehensive, and we have a phone call and walk through each item.
Yeah, no, I also agree with that. Do you drop off at some point when you say, okay, like I trust you, I don't need those anymore? Is there a time frame when you sort of say like, I don't need you to keep sending those?
Yeah, I do. For me, I am not a micromanager. I just don't have the physical time to manage everybody. So it's pretty quick. Within a few weeks, at the most, I'm on to something else. And I give them the ability to get it done, and the authority and the responsibility to get it done.
Yeah, that's also what I do. So, okay, so walk me through a little bit more for Black Dog Ventures and VC Fast Pitch. I mean, you're working with all these companies, a dozen plus companies. How many people are on your current team that work with these companies? Then how do you manage all of this? How do you walk us through kind of what the ecosystem is like and what you're building?
Yeah, what we've done is we've kept the team somewhat flexible. We've got a core of 8, and then we'll bring in other people on an as-need basis.
And that's like a C Corp or something like that, or LLC?
Yeah, exactly. And so the reality is, and what we do is we have a very simple philosophy, at the company. It's our job is to solve problems and create opportunities. And that's what we tell the companies that we work with. Sometimes those problems are not enough money, and the opportunities could be raising money, selling more of their product or service, or finding other means to solve that situation, maybe by saving money. So we're constantly, we look at every company independent of everything else. We don't have a cookie cutter approach, and honestly, the reality is, although I'm in the business of helping people raise money and get in front of investors, the vast majority of entrepreneurs shouldn't waste their time raising money. They should spend their time building their business. And I'm kind of anti myself in that statement, but that's the
well, not right. I mean, in that statement, if they come to you for fundraising help, then you're helping them do the part they're not great at, or that they want to spend time on. So maybe it is. When do you decide when to do it? I've actually had a recent conversation with another investor where they help people raise. And I'm like, well, in some cases you could argue it's not, you don't want to hire anyone to help you raise if you're a great founder. Right. On the other hand, your point, like, this is something that is not your core competency. It shouldn't be your core competency and skill if you are a great builder.
And that's the thing too. And honestly, if you're a great builder, maybe you don't raise money at all. We had a company a couple of years ago. They thought they needed to raise $2 million. I looked at their product. I helped them sell $2 million worth of their product. So they got that non-dilutive financing, and so I think that you have to really, it's interesting, raising capital gets all the press in my area. Building a successful bootstrap business doesn't get a lot of press.
Yeah, it's not as sexy because it doesn't make for a good news article.
Right, exactly. But the reality is, what we try to do is we tell people, look, it's kind of like a 3-legged stool. I can help you, one, get in front of investors and help you be prepared when you do. But secondly, I can help you get in front of people that can help you sell more of your product or service. And 3, I can help you create some more awareness and exposure. And, to the extent that 2 of the legs work well, you may not need the 3rd as much. And that's really the approach that we take.
Yeah, that's a great point. So then so walk me through, like, what is the process? Like, let's break those down, however much you're willing to share of your secret sauce on this podcast. But what does it mean? Okay, for all 3 legs of the stool, if I want to build great marketing, which I know you're kind of a marketing savant, right? What does great marketing look like? How do I figure that out as a founder? How do I make sure my product is marketable? What are the things I'm thinking through to build a product that will skyrocket? And frankly, nowadays with a lot of companies, they not only take off, they go straight to outer space pretty quickly.
Right. Yeah. It's interesting. I think it's always been the case, but it's even becoming more apparent in the advent of AI, is that get out of beta. Don't even talk about things like beta or MVPs. Just go out and build a product. Build something, sell it. Let the market tell you what you have to fix. Fix it, sell again. That's really my philosophy. I think a lot of entrepreneurs, that was that old saying, you step over great to get the perfect, and I think there's a lot of opportunities to build something great, but sell it. When I was teaching in the university, I used to tell a story all the time about, how McDonald's would spend $500,000 researching where to put a McDonald's. And then Burger King would wait for the McDonald's to go up and build one within the 2-mile radius. You don't have to spend all the time. Let the market tell you what they want to purchase and what they're interested in.
Why do you think founders don't always like to do that?
One, they fall in love with the tech or they fall in love with the product. Secondly, I think there's fear. The reality is, going out and selling something means someone could reject you. Someone could say no. If you never really go out there and sell something, you're not going to have that rejection. So I think that's part of it. But at the end of the day, and that's the thing I look for in entrepreneurs. Entrepreneurs that are being an entrepreneur and raising capital is getting punched in the mouth often and keep moving forward. And some entrepreneurs just aren't prepared for that. And you have to.
You totally agree. And then, so then with the marketing piece, how do you, I agree, like get your product to market and just go iterate as fast as possible, essentially get your name out there. How do you go market it? What are things that you recommend people to describe their product in the right way or get those customers? What does that actually mean and look like?
Well, I think you can, while you're developing your product, you can always go out there and, get feedback on what the problem is. Talk to people in the industry, talk to people that have the problem and say, look, I have a potential solution for this problem, but what would your solution look like? What would it cost? How fast would it be? How long would it take? You can ask those questions. The beauty of social media is you can go out there and poll people and talk to people, talk to potential customers while you're building it. Quite frankly, talk to potential partners and potential sales distribution partners, about, okay, what's missing in your product mix that would help you succeed more. That happens in all kinds of industries. So again, I think obviously doing some research down the line. And then secondly, just put out a product. Now, I'm not talking about an MVP. I'm talking about something you're going to sell for a price. Maybe it's version 1. See what the response is on version 1. The route you can get feedback by asking questions, but the best feedback is someone buying or selling your product, buying or not buying your product.
If people put money down, that's a whole different story.
Exactly.
They're willing to actually pay for it, which is a big, big milestone.
Yep. Absolutely.
So I agree with that. Are there certain marketers or teams that you work with who truly knock this out of the park? Like, what does great look like or excellent look like?
Yeah, I've been fortunate to work with some extremely good, marketing agencies and people that really get it. I'll name names. A good friend of mine is Eric Huberman. He runs Hawk Media and Hawk Ventures.
He was on the podcast.
Yeah, he's a savant. He is a savant. He is a grinder. He gets it. Him and I have shared the stage before. He's been on my podcast before. I've hosted events at his venue. He's come out to me and spoken at my events. He gets it. He understands because he came to it as an entrepreneur, as a failed entrepreneur, and built something. He basically, if you look at the back on what he did, he said, he just went out there and said, look, let me help you solve this problem.
Yep.
And he learned everything he could do and he just kept going forward. And now he's doing phenomenal work.
Correct. Yeah, he's great. What about, so I'm going to agree. What about Eric or his philosophy or the way he's done things? Do you think, like, what's a tangible thing you can take away from his work that can be applicable to other founders? Like, how did he do it?
One, he is always in sales and marketing mode. He's always in branding mode. And he's always in the leading edge. He was doing AI before it was fashionable. He understood, pay for performance marketing before everybody on the internet was touting it.
So is that trainable then? Or is it just like, so with him as the example, is that just because he's a savant, which sort of implies that he's sort of an N of one to some extent? Or is the skill set that he has something trainable that people can learn and get good at?
The skill set that he has, which any entrepreneur could duplicate, is one, talk to as many people as you can, be humble about getting advice, and seek that advice often. I've done that throughout my career. Every time I was not good at something, I sought out the person that was. And that's a core tenet of what Eric has done and what I think what every successful entrepreneur or business person does.
And when you go seek out these people, is it just like looking through your network, asking your friends, I need to get better at this, who do you recommend, sort of thing?
Yeah, absolutely. A lot of that. The reality is, I'm fortunate to have a large network for email and social media, but I'm constantly adding new people to my network on a daily basis. A day doesn't go by I don't connect with someone on LinkedIn or someone on LinkedIn I don't have a phone call with to get to know them. That's a daily thing for me.
Wow, that's great. I'm definitely connecting with lots of people on LinkedIn myself as well, but I don't have calls with all of them. Although I have calls with potential customers, partners, all that every single day too. So
I remember about 10 to 12 years ago, it was Facebook then, what I was using. And I made a goal to have lunch with 100 Facebook people that I didn't know. And I did.
Wow.
These are people that follow me on Facebook. I had lunch with them. I bought the lunch, 100 lunches.
Just you want to see why they followed you, what they were doing.
I just wanted to get to know who they were because the reality is, my business is about relationship and business in general is about relationships. People do business with people they know and people they like. Sure, the internet and all other things, there's all kinds of, click here, click there. But at the end of the day, when you're trying to do a high level amount of business that I'm doing at a high level, from a pricing standpoint, it's got to be, you got to have a relationship.
Yeah, no, I totally agree. But okay, I would say that 100 people on Facebook. So you met all these 100 people, and then what percentage of them became customers or referrals? What was the ROI in that, and why did you stop doing that? Like, why haven't you continued that?
Oh, I still do it. I just use LinkedIn now. So quite frankly,
you're going after like 100 LinkedIn people every year.
I will meet them in one way, shape, or form. I'll invite them to an event that I'm attending, that I'm hosting, or I'll go to an event they're hosting. It's constant. I'll be in Los Angeles with 200 people for an event I'm hosting next week. Obviously a week from this program. I'll be in Nashville the week after, New York the week after that, and these are people I'd met online that I'm now meeting in person.
And you just say, hey, look, I'm here for this event. Would love to meet you.
Yep.
Let's grab a coffee or let's get a group together for a lunch or something.
Absolutely. Constantly.
I've done a bit of that too. Have you found a successful way to we've done that for my team and I have worked and done some of that at Shore. Sometimes it seems difficult. We'll send a message to everybody. We get all I probably have 1,000 or maybe 5,000 connections in the New York City area. And yet culling that down to a certain group of people we actually want to get lunch with is actually sort of difficult.
It is difficult. But you mentioned the ROI. I've closed literally tens of millions of dollars in deals, with someone I met that I decided to buy them lunch or buy them dinner or buy them coffee. And so the reality is the ROI takes care of itself. But at the end of the day, I also made some great friends. Yeah. I was on a cruise this last week with my fiance and met this great guy online. He is now my travel agent, and I just secured him 2 interviews for his IT job, 3 days after the cruise. So
that's awesome. This is great. So it's just being helpful and kind of putting good karma in the world. It sounds
absolutely. Absolutely.
Thank you for jumping on this call right after your cruise. I mean, you look well rested, and so do you think that's something does every founder need to get good at building those personal relationships? What does that look like as a founder to be?
I think it's essential because the reality is, especially, I tell people, obviously a lot of founders, it happens to me several times a day. It happens to every investor several times a day. You get a founder, connects with you on LinkedIn, and they immediately put their pitch deck in your DM.
Yeah.
And they don't get the desired results. I don't care what anyone tells you, but it's the one that connects you to and say, look, I'd like to get your advice, or how can I help you? It's the ones that buy that VC's or that investor's book, attends that investor's webinar, that goes to that webinar, that investor's event. You build familiarity and you build a relationship. I get entrepreneurs come to me all the time and they say, well, Scott, I want to raise money. When should I start building my list? I tell them last year.
Yeah.
It just doesn't work. A lot of these transactions are based on relationships. I'm going to do a deal with somebody that I know and trust, and I built a relationship with more so than I am just a cold outreach.
So how do people know when you're doing deals? Let's talk about Black Dog Ventures a little bit. How do they know when you're pitching your network a deal? Because people let us know, like, hey, you're probably getting paid to help pitch some of these deals. How do they know you're pitching a good deal? Like, can they trust you?
Well, two things. One, I'm fortunate at this part of my career where I can be very selective in the things I get involved in. So they know they're not. I've already vetted them and vetted the entrepreneur. Obviously, you can't guarantee success on any venture, but one, this is a trust relationship, and I'm not. And they also know I'm not going to violate their trust by just sending them whatever company happens to get in front of me. Some of these companies they hire us. Some I've invested in. Some we own stakes in. We've had other relationships with. And I tell them, okay, this is a company that I'm believing, that I'm participating in, I'm working with or investing in. So it's really based on that relationship that I have with them. And we have a mutual understanding that, we are not a warehouse of opportunities. We are a select opportunity provider.
So how do people come to you? Like, how do founders come to you guys in Black Dog Ventures and decide, like, we want to get involved, work together? What does that look like? And what does a founder choose to work with you versus trying to do it on their own? Because founders are cheap sometimes. Like, I can be just doing like.
Agreed. Well, and again, what we typically do is, I'll be frank with you. I would say probably 100% of my business comes from recommendation of somebody else. So someone who's been successful, I have 300 plus recommendations on LinkedIn. And
I saw that. I actually wanted to ask you about that. Do you ask people for that? Hey, we did great work together. Like,
I ask sometimes, and I get a lot of unsolicited ones also. And then we have an interesting process. I tell people you mentioned earlier that I host my VC fast pitch events. I do an online event once a month for VC fast pitch. I do free webinars every month to give entrepreneurs education and some advice with various different guests on the webinar. But the VC fast pitch has been a really good way to vet people. And what I tell people, look, you listen in free to one of my opportunities, one of our pitch events. If you do want to participate, let's do a low-cost pitch session. I will prepare you to do a right pitch, and then I'll put you on either on stage or online with dozens of investors. And then they pitch for 5 minutes. And I'm a big believer, if you can't succinctly answer a few important investor questions in 5 minutes, 20 minutes, an hour isn't going to do you any good.
Absolutely. And then, so basically then you choose from that sort of group of people who do this sort of pitch, you help them out a little bit. And then if they're good, be like, hey, I would love to work with you further. Is that where it comes to you?
Exactly.
Smart. So it kind of gives you a funnel as a business for yourself. It gives you a funnel to do that. And then do you mind me asking, like, if you're willing to talk about some of it, like, do you charge a percentage of the raise? Do you charge them a monthly fee? How does that usually?
Well, I'm not a broker dealer, so SEC guidelines don't allow me to receive a success fee on fundraising. So, we typically come on as an advisor, do marketing for them or some other role. I tell people we are a marketing agency, and we market companies to potential clients and potential investors.
Okay. And that's just, so then it's a monthly fee essentially to do that.
Again, I don't have a standard fee. I look at each opportunity independent of the other.
Okay. Interesting.
I look at the opportunities for something, and honestly, it's got to be something that I feel comfortable or have a high probability that I could be successful with the people in my network.
Yeah, you want to make sure it's a win for you too, right? You can't be helpful to someone unless you think you can actually make them a win. Like, that's just no one's going to get good stuff out of it. Walk me through a little bit of, like, why you started Black Dog Ventures, some of the career pivots that you've made. Where did all this get started for you being more of an entrepreneur?
Yeah, I started out honestly as when I got an undergrad in New York, I worked as a retail stockbroker in Lafayette, Louisiana, when oil was $10 a barrel. That was an interesting time. I got plenty of stories about that. Then I moved to San Francisco, worked as an investment banker, taking tech companies public, did that from 86 to 93. 93, during the dot-com boom, I was in San Francisco, so I launched my first dot-com, launched 2 more, and exited those between 93 and 2000.
Wow, so you did it all during the go-go.com days.
Yeah.
You were able to exit everything before the crash?
Well, let me say I exited enough to be okay. So,
I mean, it's amazing.
Yeah. Yeah. So then what happened was, honestly, I moved from San Francisco to Arizona. I tell people,
A question about that. So I find it fascinating that period of time, right? What about the exit, right? I think a lot of people exited as well, but they didn't necessarily sell, right? So they had an exit, they went public or something, but they held because everyone was a believer.
right.
What made you think a little bit more, hey, like this maybe is a little bubbly. I need to get some liquidity.
Well, I was always a big believer in, taking chips off the table. I think it's important to, honestly, as a broker, one of the main sayings they would say is that, bulls make money, bears make money, pigs get slaughtered. And so I learned that early in my career. And, when it was, managing a portfolio of equities for a client and, holding on to that one investment a little too long, you learn, by taking your shots. And the same thing, held true there. And honestly, one of the things about being an entrepreneur and a founder is that I like creating and building companies. I don't like staying in them forever. I want to move on to the next interesting thing, and then the next interesting thing, and that's essentially what I did. And that's the beauty of what I do today. I get to work with really incredible founders and build incredible things on my own. I don't know if it's ADHD or some other, mental fallacy that I have, but I'm entrepreneurs and founders just want to found things and create things.
Why do you think, I mean, maybe this goes back to your own, when you were growing up or something, like, if you look at your peers today, how many of them are still reinventing themselves, working all the time, building things, versus somehow fell off and went off in different directions in life? Like what made you different? Because I kind of imagine most entrepreneurs, especially ones who stuck with it as long as you have, and I'm in the same boat, to be clear, there's something different going on. I don't know what your life history, what do you think makes you
Well, I think the thing is that, as I mentioned before, that was my first unsuccessful retirement. My second unsuccessful retirement was when I moved
to the .com boom?
Yeah, so I moved to Arizona. After about 6 months, I had no idea what I was going to do with the rest of my life. I was in my.
How did you move to Arizona?
It was just, I just wanted to. My kids were I wanted to raise my kids in a less crazy environment. So I moved to Arizona. And, after a few months, I got involved in the music entertainment business and built a nice company there. Sold that 6 years later. And then that's when I started Black Dog Venture Partners. And that's what I've been doing ever since. So.
And was the idea initially like, you're not a standard Silicon Valley like investor, right? So like what made you different and want to do it in a different way? In a way that you presumably thinks is more successful, at least for you, than being a traditional, like raise a big fund sort of thing.
Yeah, it's, because again, and it's interesting because I launched my podcast earlier this year called the Emerging Managers Podcast, specifically to go against the thesis of these mega VC funds.
What's the thesis of mega funds?
Well, the genesis of saying the podcast was there was an article. I had a stake in a podcasting company, and the founder kept asking me to do a podcast, and I go, well, "What do I do a podcast about?" That has been done before, with respect. And there's a really interesting article that came out towards the end of last year, or they mentioned that there were 3,200 venture capital funds in the U.S. And I forget the exact percentage, but they said, I think it was 78% of all the money went to the top 25 venture capital funds.
Yep.
And they don't get the alpha. They don't get the returns that these smaller funds do, because these smaller funds are more hands-on, understand that they've got to accelerate a return to be able to raise the second fund and the third fund. And that is really much my philosophy too. Is, I'm not a really good employee. I only worked for someone else for about 18, 20 months of my adult life before I went on my own. And the same is true. I want to call my own shots, not necessarily have to work to a thesis and a return that the LPs want. And sometimes, and especially with early stage startups, they need more. Capital is a tool, much like a hammer. It's great for, hitting a nail. It's really bad if it hits your thumbnail. And so there's other things that entrepreneurs need besides capital. They need guidance. They need perspective. They need people who've made and lost money. They need to know people that have taken risks and succeeded and failed. And I've done both. I believe that, my relation, what I offer to entrepreneurs and even to some of the VC funds I work with is I offer contacts, experience, but most importantly, I offer perspective.
Mm-hmm. Yeah. No, look, I think having a real perspective is also important. It's funny when I do talks to founders, I tend to have a fairly strong opinion about some of these things because I've been on both sides of the table as well. I've founded 4 companies. I've invested in over 200 companies through a few different funds of my own. And I joke sometimes like I have a better record than 98% of VCs, but I never started a big fund, partially because like I enjoy founding companies. And it's sort of the same reason you're doing it, right? It's like I want to be more deeply involved and meshed with the founders. And that's what I enjoy more. And maybe that hurts my personal returns in the sense that like I'm not getting paid a fee off of capital just sitting around, like assets under management. But it's more fun that way and you learn more and go deeper. So I'm really right there with you. Then when you're thinking through, once again, like the companies you're working with, how do they end up finding you? Is it all just through your network? Is it just word of mouth through your network, through your podcast that you're doing, pitches, everything else?
It's almost entirely through my network and through referrals. Like I said, I host at least one podcast, probably as many as 3 podcasts on various different topics that are free to entrepreneurs. So I want to make sure I'm a big believer that an informed purchaser or consumer is a good purchaser and consumer. So I make sure they have all the information they need. We host webinars on non-equity based funding, on all aspects of building a pitch deck or presenting. That's so we want to make sure they get the tools they need, because it's like I said before, it's hard enough to be a successful entrepreneur, but try to be a successful entrepreneur, but not having the whole toolkit. And through that, hundreds of people, come to me, through those funnels.
So you really built your career at the kind of intersection of sales and storytelling in a lot of ways. Like, what are some of the non-negotiables in like a winning pitch? Like, what makes for a truly fantastic pitch?
It comes down to a few core things. And I talk about this all the time. It's first of all, you have to clearly define a problem that's a problem for enough people and a problem worth solving. You have to have a solution that makes sense. Is it cost effective? Is it easier, cheaper? What is the goal there? And then so those are important parts. You need to know your market. You need to know who you're going to sell and how you're going to reach them. I think that's extremely important. I stress probably the most important thing that I look at is the team, especially when it's early stage. It's startups. If it's a pre-revenue startup or even a pre-product startup, team is mandatory. And don't tell me you're a solopreneur. If you can't find advisors, if you can't find somebody to believe in you enough to come along for the ride at some level, that's a big red flag for me.
You certainly agree. How do you really define though what makes for like a truly great team? Like, how do you really look at what is a great team versus an okay team? Because look, any founder, if they're going to go start a company and have the guts just to even try it, they probably think they are amazing at what they do. I hope, at least. Like, I wouldn't start a company unless I thought I was great at what I'm doing. What makes someone truly though stand out to an investor? Not just, hey, I think I'm smart and great and hardworking. How do you actually stand out?
I think it's got to be a healthy dose of confidence and humility. I find a lot of founders, they suffer on one or the other end of the spectrum. Either they're far too cocky and think they know way too much, or they're far too humble and don't take credit for what they've accomplished or what they can accomplish. I think it's got to be a healthy dose of that, because that makes a good leader in any capacity. Whether it be, entrepreneurism, sports, whatever the case might be. You've got to be confident, but you have to be humble enough to know, okay, this is what I don't know. I mean, we have countless conversations every week where, I tell entrepreneurs, don't pretend you know the answer. Don't fake the answer. If you don't know the answer, say you don't know and promise them you'll find the answer.
Yeah, and actually follow through.
Absolutely.
Yeah. Some people, when they don't follow through, it's even worse.
Exactly.
So are there other elements to storytelling or pitching that are critical? Like, how do you suggest people tell a great story?
Well, I think you need to personalize it. I find some of the best pitches start with how this problem affected them or somebody they know. I think that really drives it home, because that tells me as an investor that you're passionate. You've had the pain, you've had the suffering, you've had the financial loss or some other consequence of this problem. So I think it all starts with telling a story of why you did this. And I like a good background story. I want to know, I love entrepreneurs and founders that, play competitive sports or did something competitive that was non-business related. So I understand they understand the value of hard work, preparation, and learning from your mistakes. But again, when it comes to storytelling, I want to hear a story about how this problem impacted somebody and how significant that impact was.
And then do you also look for, especially nowadays with how easy it is to like vibe code new products, for them to actually, to your point of like great products, having some traction and being out in the market, showing like, hey, like I built something simple, I've shown some level of growth, because at this point it feels like almost a requirement.
I think it's a mandatory requirement now, in my opinion, because the reality is I had an entrepreneur come to me a couple of months ago and said they wanted to raise $5 million so they can have an MVP in 24 months. I go, well, what are you, shoeing horses? That's terrible. In this day and age, you don't need 50 coders. You don't need millions of dollars.
You should be able to get an MVP up and running.
Absolutely. You should be able to get not just an MVP, but something with a paywall in it. I don't care if you're charging $10. Here, I'll give you a 1-week trial for $10. You tell me you got 1,000 people to do that, then you're probably getting an investment.
So given attention spans that are so short with people, how do you help get that message out to folks nowadays? Like what are the things that work? How does a founder spread that message?
Right.
Attention spans are so short. Like no one can pay attention. Like I give ourselves both credit that we can stay in a call and have a good conversation for.
I think it comes down to, and first of all, I was a lady entrepreneur trying to raise money. You got to be prepared to hear potentially hundreds of no's, but you have to define what those no's are. Sometimes those no's are just a straight no. Sometimes those no's are not enough information, and sometimes those no's are not yet. And I think the founders that are successful is they build a cadence of updating all the no's with whatever traction they have. And traction can be defined a couple of different ways. Obviously, the best traction is sales, revenue, and profit. But there's other traction. There's, signing letters of intent, building distribution agreements, building a wait list. All those kind of traction items demonstrate that you're moving forward. And what I tell entrepreneurs all the time, and we do this as a practice, I tell entrepreneurs, look, we're going to present to companies, and then what you need to do is every 10 business days as a minimum, I need 3 or 4 traction items to send me.
Just like every 2 weeks is a 2-week sprint. You just need to be on top of
it. You send me 2 or 3 things in bullet form that you've accomplished. Because what that does is it is that attention span. And you'll find the vast majority of entrepreneurs won't do that.
Yep.
And the investors that pay attention to are the ones that see that. Because understand especially when it comes to venture capital firms, you have to understand they're in 2 modes. If they're raising money for a fund, they're not talking to entrepreneurs. So you may be talking to them where they're fundraising for themselves, and their focus is talking to potential investors for them. So you may not have the right time, or you may not have given enough information. We've had it happen many times where an entrepreneur pitched an investor, they said no, they kept send them updates. 6 months later, a year later, there was something that they sent them that triggered a reaction. They made a portfolio investment in a complementary company, or something changed in their history or their future. And so I think it's a really important and that's part of the relationship part of it. We've had countless cases where, they said no, yes.
What? But you've also worked with, once again, you kind of work with the cream of the crop of companies, right, that you see come through. And yet I bet not all of them are able to send out a bullet point list of the things they've accomplished every 2 weeks. How do people stand out? Like, how are some people really good at that and other people not?
I think it comes down to you have to create the impression that you would like their investment, but their investment isn't going to change your moving forward.
Hmm.
I think that's really critical. I think you have to continue to move forward because you don't know what that one thing is going to be that can change everything. A few years ago, there were companies that could not succeed, or they say they cannot succeed, that are doing amazing things today because the technology caught up with their idea.
But have you seen a difference? Are there certain types of founders who just are clearly ones that are either more productive, better at energizing their team, better at hiring? Like, what leads to companies that start to get continuous improvement over a short period of time, right? Every 2 weeks, they're just knocking it out of the park. And there are others who just are not, or they're struggling to get an update every 2 weeks. There must be some difference that you.
Well, I think the difference is they're constantly pushing forward. It's that grit I talked about before. It's not difficult to build some form of traction. You can get, a letter of intent. You can get a distribution agreement. You can bring on an advisor or hire, a key team member. You can build a landing page and, capture data files. All those things can be done. It just comes to the desire and the willingness to do what's necessary to get it done. And what's necessary is working harder, longer, and more diligently than everybody else.
Always true. Almost the universal thing is just being willing to work harder than everyone. What do you like as a professor? And how long? Let's talk a little bit more about being a professor. How long have you been a professor?
Yeah, I was. Well, I mean, I'm not teaching often anymore, but I taught entrepreneurship at Grand Canyon University in Phoenix, Arizona, to budding entrepreneurs, and I managed the student pitch competitions and things of that nature. So most of my stuff is really kind of adjunct, guest lecturing now.
What do you find the difference? Which is great. What do you find is sort of the difference between academic theory and real world entrepreneurship?
Well, it's interesting you say that because when I was asked to teach this entrepreneur class, they gave me a curriculum and a textbook, and I gave it back to them. I said, no, I'm going to teach them how to be entrepreneurs, not how to pass a test or write a paper. So what I did is I brought in entrepreneurs, venture capital firms. They dialogue with them directly. I gave them, each one of them had to build a business from scratch and pitch investors, build a pitch deck, build a marketing plan, create a funnel.
Get your hands dirty.
Actually do it. Don't get me wrong. I mean, I've been to college. I've 2 degrees, and both of my sons are in college, or one graduated and one's a pre-med. So he's, we've got college is not necessarily a bad thing, but I think entrepreneur, can be learned a little bit, but it has to be experienced to be successful.
Are there certain leadership styles that you think are most successful as a successful sort of founder, right? Is it you sort of have the Elon Musk of the world, or the Jeff Bezos, or the Steve Jobs? Are there certain mindsets that set the best apart? And then how do they lead their companies in the right way to achieve outsized excellence?
Well, I think it really comes down to the reason why some of those folks you mentioned are successful is much like I mentioned before. They empowered other people and gave them responsibilities and authority. I think that's the key, and honestly, many of these entrepreneurs, Jeff Bezos is a great example. He stayed very focused in the beginning. He had more books on the platform than the history of every library and, bookstore in the history of man before he launched into something else. He got really good at one thing and expanded on that. Elon's, much the same way. So I think the reality is that, the leadership style comes down to, like the word implies, be a leader, don't be a manager. Mm-hmm. Being a leader is empowering people, giving them authority, giving them responsibility, and holding them accountable for those 3 items.
Yeah. And it's funny. I think holding people accountable is critical, but it's also really difficult to do well. And to some of the stuff we just talked in the beginning is making sure you're tracking people, the things they promised to do, and then following up to make sure they actually accomplished it. Yep. It's difficult. So what do you find, are there ways that founders can move from being a founder to essentially being a leader, right? There's we used to say on my website, we used to have a statement that said, Hiring Chore, my company, is when you move from being a founder to CEO. In other words, when you move to becoming a CEO, it's when you start realizing I need to delegate, and I should not understand how HR, finance, compliance, all these pieces work.
Right.
Why? Like the smart founders, that's my own pet peeve. Smart founders would never want to reinvent the wheel. Like, that is stupid. I'm not going to go reinvent the wheels for my car that's already been solved. Why would I go do that for my startup that's also been solved? So I just hand it off.
Well, it's interesting you say that because I can tell you a story. When I was a very new stockbroker, I think I was on my third day. I was from New York and my manager was from Boston. So obviously there was a little rub right there. And one day I was sealing envelopes and he came up to me and goes, "What are you doing?" I go, "I'm sending out information to investors." He goes, "We have a receptionist for that." With respect, at the time, he goes, "That's a $5 an hour job. I want you to do $500 an hour tasks."
Yep.
And that's what it really comes down to.
Yep. But I agree. We actually have that on our website too, that like, what's your value worth as a founder? And yet, once again, and maybe this, I'd love your take on like the marketing message. Maybe we're doing the wrong marketing message for ourselves, but I think so many founders do this too for their own products. People don't understand the value of their time. Why are they mostly terrible at recognizing the value of your time and how you need to focus on the things only you and I can do this podcast. I cannot delegate to someone else because it's not a podcast they can do. But there's lots of things that go into getting this podcast and making it great that I can delegate. And I do.
Exactly.
But yet so many founders have trouble with all of those aspects. They think they need to do it all. Like, how do you get good at, I'm kind of going back where we started to an extent. Yeah. That's kind of a good story arc anyways.
Right.
Like, how do you get good at delegating? How do you get good at being comfortable with that?
I'm glad you used the word comfort because I think the reality is, I think the fear, the inability to delegate comes from fear. Okay. Fear from two things. Fear that you didn't delegate properly and it's going to get done wrong. And the other fear is if you delegate, you're going to have to start doing the real hard stuff, like selling and communicating and talking to people. So I think you've got to get over that fear first. I tell everybody, you can't have the thrill of skydiving if you don't jump out of the plane.
Yep. That's a great point. I'll give you an example that I think you'll appreciate because it still bothers me to no end. So I met a founder talking about potentially using my company, and he said, and he also wanted advice on fundraising. And he had been working on his company for 6 years. And they were sort of finally getting to the point they were ready for a Series A, he thought. Mm-hmm. He was a former McKinsey consultant. So very smart, great background, all the other stuff. And he said, "What do you think? Can we raise?" And I was like, "No, like you've been at this for 6 years and you barely got to a point you're going to do your Series A. And that's insane." And we talked about some of the things he's been doing. And he's like, "Oh yeah, well, I do my own bookkeeping." And I literally said to him, like, I get it that as a McKinsey consultant, you know how to do your books. I understand you have that knowledge. But imagine all the time you spent over the past 6 years doing your books that you didn't move the product forward. You didn't get new customers. And he was like, "Oh, but it wasn't that much time." And I was like, like that's where you're wrong. You didn't actually value your time properly. It's just a few minutes of it might have only been 30 minutes here, 30 minutes there. But over 6 years, that adds up. Yep. And now you're many years behind and you're not going fast enough. Like nobody's going to invest in you. It took you 6 years to get to your Series A.
Yeah, you can't have velocity if you're doing everything. I tell people all the time, you have to paint the race car while you're driving.
Yep. So walk through, like, let's just do a quick sort of lightning round in AI. I don't want to overburden AI stuff because it's in the news all the time, but like, how is AI changing fundraising, pitching? We talk a little bit about how it's already changed kind of product building. How is it changing fundraising and pitching?
Well, we'll start with that. The first part I mentioned before. I think you have to pitch not an idea that takes a lot of money to get to a small, goal. You have to be able to already have that small goal accomplished. That's number one. And obviously, on the fundraising side, it does provide the ability to get better research and better analysis on what investors to pitch and present to. Because that's my biggest pet peeve is that, entrepreneurs will just pitch anyone that says investor on their LinkedIn profile without doing some research ahead of time. Don't pitch me your SaaS company to a biotech investor. It's ridiculous. So obviously AI and even the technology before that made that easier. And you're also finding, from a founder, an entrepreneur standpoint or investor standpoint, is that due diligence is now starting to, use AI. The reality is if you are a large venture capital fund, you're seeing thousands of pitch decks fly through your inbox every month. You're going to use AI to ferret out the ones that you don't have a relationship with already.
Absolutely. And this is actually, by the way, something that also pet peeve of mine, where founders will ask me, hey, can you make intros for me? It's like, well, to who? Well, who do you think would be a good investor who's a fit for my company? I'm like, dude, I have 20,000 connections and I have lots of investors I know. If you haven't done any work to even try to look at my network and figure out who's a good fit, why do you think I'm going to go spend time thinking through that for you?
Exactly.
Unless there's a personal connection, there's zero chance I'm going to do that. And you've been too lazy to do the work.
Right. And that's the perfect word, lazy. Okay. Do your homework. I tell entrepreneurs, if you're going to go raise money on your own, you better have 200 people that you have qualified as to investors that invest in your vertical, invest in your stage, and you should already have built a relationship with them over time. Because the reality is, even with those 200, you'll get 170 no's. You'll get 30 phone calls, your first calls, and maybe you secure 2 or 3 investors. The math still applies today. It's a numbers game.
Yep. So AI is just making everything faster. Any other key things with AI that you think are just changing the world right now, from fundraising, pitching, company building, exiting, or also actually not just AI specifically, but also for emerging investors? What's changed for them as an emerging investor since you talked to so many?
Well, what I think AI has done is, one, it's leveled the playing field for entrepreneurs. They can build something faster, cheaper, but it's also leveling the playing field for investors, VCs. They don't have the ability to hire a ton of analysts. They don't have that research bank. So they can use those tools to, one, vet companies easier, and then 2, provide better service to them post-investment.
Yeah. I would say also, by the way, the one thing that I thought you were going to say is AI has also changed how easy it is for people to compete with you. So the fact is, it's also, yes, you can build something quickly, but you also will have competitors come out quickly too. And so you need to iterate really fast.
You do. It is speed. It is, obviously everything is happening much faster. We had one of our companies go to a conference, and, they thought they had the best AI technology. And at that conference, they met 9 competitors. Yeah. And I said, look, that's just the nature of the beast. If it's a big problem or a good idea, it's unlikely you're the only one that has the solution.
Correct. Yep. And then actually on that note then too, I have to ask, how do you build a moat in today's world?
I think it comes down to the non-technology part of it. I think you build a moat by the relationships you have, the contacts you've built, the favor bank that's in your favor. I think that's part of the moat. Sure, there's all kinds of moats regarding IP and technology and things like that. But, honestly, there's 2 companies if 2 competing companies have great technology and one has a great founder team, that's the one that's going to win.
Yeah. Although, sorry, and now I'm getting close to the end, but I had another question to just keep bringing up. Just great founding team makes sense, but I've also seen, and I think actually the data backs this up, a large number, maybe not the majority, but a large percentage of companies fail because the founding team breaks up. They essentially have a co-founding breakup. So yes, that founding team can be your superpower, but it can also be your Achilles heel.
Well, 1, understand that it can happen. 2, then it's much like we talked about the hiring process, is make sure you really vet your co-founder and you have a good relationship with them. Be careful about who your co-founder is. I was told very early in my career, if you ever wanted to enjoy Thanksgiving dinner, don't invest family or friends' money. Maybe you don't mix the 2. I think there's some very successful founders that are related, but honestly, why create another potential buffer or another potential issue?
I totally agree. I think it's rare to see that. Actually, my brother and his wife started a company together and they did it successfully, to their credit, but I know it went through some tough times for them. It was challenging as well. And I've seen that happen many times. And I've had one co-founder semi-breakup, and then I've had another that we did have to break up, but we're still super close. We have a VC fund together. all those sort of things, because we chose, I think, really wisely and have a deep respect for each other and play long-term games is how we describe it. So walk me through, Scott, just a few quick sort of lightning round questions. Is there a book that you think every entrepreneur should read or podcast they should listen to beyond your own?
Probably my favorite book. It's an old one. It's called The Millionaire Next Door. Well, because again, it allowed me to not judge people, a book by its cover. And, George Daly wrote this book, and he did an analogy of what pseudo-affluence is versus affluence. And, he wrote a study, a part of this book, he did an analogy of someone who is a doctor 2 or 3 years out of medical school. And, they have the trappings of having money. But they also have hundreds of thousands of dollars in medical debt and med school debt and everything else, versus the person who runs a junkyard with literally tens of millions of dollars in their retirement plan. And I had a real world example of that, if I can share the story. So I was 22 years old in Louisiana. My third day in the business, I get Mr. Abear to buy $500,000 of municipal bonds on the phone. My boss says, "Look, get in your car and go pick up that check today, right now." So I get in my car. I drive up to Mr. Abear's house, and it's a metal shack. I walk up to Mr. Abear. He is whittling some wood and may have had 7 teeth in his mouth. Again, mind you, my third day in the business, 22 years and change.
That's a lot of money. I mean,
he gave me $2 million at the end of the meeting. And I said, "Mr. Abear, I don't need to be rude, but how'd you get this money?" He took me around to the side of his house, and what used to be rice fields is oil derricks as far as the eye can see. And Mr. Abear was generating $8 million a month in oil royalties. So he became my biggest client. And fast forward 6 years later, he helped me found my first startup. So that was a book that was really impressionable to me, because I think a lot of times, especially in this industry and with social media, there's a lot of folks that give the impression of having something. But I always look for the quiet people in the back of the room.
Yeah. So a lot of people are faking it, basically, for who knows what psychological reasons. Quick question actually for you. Is Mr. Abear still alive?
He is not. He passed away so many years ago, actually.
Do you think that it sounds like he was very humble and probably didn't really spend his money? Maybe he invested it wisely in you, but didn't otherwise really spend the money. Was that wasted on his heirs in a sense? Like, did the next generation change things?
It did. He had a daughter. She didn't earn anything, and not that he did either. I mean, he worked hard. But yeah, I think sometimes, wealth inherited has a different way of acting than wealth earned.
Totally. What's the most underrated skill in venture capital? So like great small VCs and VC funds.
The ability to sell. I think sales is a lost art in every capacity. I was trained to close and shut up. I was at a lunch meeting with my manager and investor, and I closed the investor, and my manager told me before the meeting, after you close, do not say a word. First person to talk loses. I started opening my mouth. He put a fork in my thigh. Sales is a lost art. Communication is a lost art. I think the internet has provided many opportunities to scale and do things easier. But I think in some cases it acts as a crutch to not have those actual personal relationships and get people to do something.
Why is it so hard to hire great salespeople, though? Like, is it because sales is a lost art and people are faking sales, even though they claim to be a salesperson?
I think that's part of it. I don't think it's not taught as much as you would think anymore. I think a lot of people have to, you can go on, I can click on Facebook or Instagram right now, and there's some guru that told me how I can pay them money and they'll click me to millions. I think there is, it's not to say it can't happen, but I can tell you to this day that my largest closes and the people that I work with the most are on phone calls and Zoom calls just like this.
Yeah, all the time. Is there outside of team, are there other big red flags on a pitch deck when you see them? You're like, this is a huge red flag.
I mean, I hate hearing statements like, I don't have competition. I tell people that the pencil is still a competitor to the computer. the cost, the ridiculous sayings that if I capture just 1% of the market, it'll be $1 trillion company. Be realistic. I think people abuse Sam and Sam all the time. And I think you've got to be really pragmatic, under promise, over deliver.
Yep. Is there a favorite quote you have about leadership?
I would have to say at the top, unfortunately, I just don't have one at the top of my head.
We can come back to it if it bubbles up. What's the best business decision you think you've ever made?
I think the best business decision I ever made was going into business for myself. Like I said before, I had a pretty successful career as an investment banker in San Francisco. And I remember after about 18 months, I was the producer of the week for a 4,000 person firm. And I broke the firm record for revenue individually. I was in San Francisco. The CEO was in LA. The CEO took everyone in LA to a party to celebrate the firm's success. I didn't get a plane ticket to LA. I quit the next day.
Wow. Good for you. First of all, good for you. Second of all, what was that CEO thinking? He just out of touch? Seriously though, do you think he was just out of touch and just
I think
he didn't really recognize and realize maybe like it was an oversight and he was not a good enough of a CEO that he realized?
Yeah, I think so. The reality is in some cases you're only as strong as your weakest link, and so you might as well treat everyone the same or treat your best links at least the way you treat everybody else. But yeah, that told me that, okay, it's time for me to be the entrepreneur. It's time for me to be the leader.
So Melvin is your famous black dog and kind of your mascot. What has he or using his likeness with his maybe dog personality in a sense, or what does that like talk about brand personality and maybe the value of having a brand personality?
Well, yeah, it's interesting. I started the name came about, really by accident. I was going to name the company after my son, Zachary, and we had a trademark issue and, something came up with the attorney. And oddly enough, the very first dog was Mike. The first black dog was Mike. And we had just taken the dog to the vet and we just came up with that term and named Black Dog. But all of these dogs were lab mixes. And so what I learned about this is that they were easy to love and they were always dedicated. And that's what I try to be. I try to be easy to love and always be dedicated to what I'm trying to accomplish for my companies.
Yeah, no, love that. Critical question. If there is a single piece of advice though, single piece of advice, break it all down, all the discussions we've just had, into one single piece of advice that you would give to every entrepreneur to achieve excellence, what would that really be?
Well, always be willing to learn.
I also completely agree. It's shocking how many people are unwilling to change and to learn. They don't want their priors destroyed. So Scott, how can people get in touch if they want to learn more, get your help with fundraising, marketing, you name it? Where can people find you?
Sure. You can reach me at blackdogventurepartners.com. If you want to pitch one of our events, you go to vcfastpitch.com. You can find me at all social media channels at blackdogceo. And you can send me an email to scott@blackdogvp.com.
Amazing. Scott, thank you for your time. It is precious. So I really appreciate you spending some of it with myself and our audience.
My pleasure. Thanks, Adam.